Okay, so today we are going to learn about income, factor income and transfer income. To understand very simply, we can say that transfer income is the stuff that we love, because transfer income in a way can be said that it's free money. Transfer income is free money. However, factor income is not free. You have to give something. You have to give something. That means you have to sacrifice something. Only then you will get money. You have to give something and only then you will receive money. By the way, I'll recall everything once everyone joins, but now till then, let's go through this. Give something to receive money. So you're giving something, you're receiving something. This is called bilateral. Bi means double. So this is bilateral in nature. However, transfer income, it is unilateral in nature because it's directly given. The best way to identify and understand what this is by examples. So without wasting time, let's understand some examples. Factor income. It is your factors. What are the factors? We have land, labor, entrepreneur and capital. So you get rent. By the way, I'll just go through this, and once everyone joins, I'll start again and I'll explain from first. Till then, I'll write. So land, you have rent. For labor, you have wages. For this person, the entrepreneur, you have profit, and in capital, you have interest. All of these are connected to the factors of production: land, labor, entrepreneur, and then capital. If you give these, or if you have these, you will get these things in return correspondingly. And all of this goes under your factor income. Got it? For an entrepreneur, he's taking risk. For the labor, he's given his time, he's given his energy in return for wages. Now, in the same case, for transfer income, what will happen? The government can be like, okay, this labor, he was given his time, he was given his energy, but he doesn't work anymore, he's unemployed. So governments might have a scheme called unemployment allowance. If anyone is unemployed and is a good person, has a good record, that means the government will give him some money to survive when they are unemployed. The government will give money to survive when we are unemployed, and that comes under unemployment allowance. So going again from first, I'll just tell them one more time. Okay, I'm starting. Income is what we get, what comes in our pocket. And in this chapter, we are going to learn about two types of income. One is factor income and one more is transfer income. In transfer income, it is unilateral. That means we get without having to sacrifice anything. We get the money simply for existing. And that is why we love that shit. It's easy, free money. Who doesn't like that? Next, we have factor income. In this case, you give something, then you get money. If you don't give anything, people will tell you to get lost. And since you're giving something, you're receiving something, it is two-way. We call it bilateral. Here, you're only getting money. If you are only getting money, it is called unilateral. Simple: income, factor income, transfer income. Factor income, you give something, you receive money. Example, you have rent, wages, profit, interest. How do you get interest? If you give your own money beginning. How do you get profit? If you take a risk, you get profit. How do you get wages? You have to spend your time, your energy and work for someone, then you get wages. How do you get rent? When you have land and when you give the land in rent. So this is how you get factor income. Transfer income, unemployment allowance. If you're unemployed, you get this. Or scholarship. You did not have to do any of these factors. You did not have to go to some company and be like, here is my labor, I worked 10 hours for you, give me a scholarship. No. Scholarship is given on the basis of merit. There's no transfer of factors here. So scholarship is a transfer income. We love that shit. Then pocket money. Pocket money given by the government. Easy. That is unilateral. Government will simply give you for existing in some countries. Like in Sweden, you get money for going to school and getting educated. If you get A grade, you get money and such like that. And one more thing will be old age pension. Old age pension is also a transfer income. Old age pension is a transfer income because anyone over the age of 60 can register with the government and they will get old age pension. At the same time, retirement pension that is given by your employer. The company that you work for gives you retirement pension, that will come under factor income because you had to give your labor. Then you're giving them, then you are receiving retirement pension. Old age pension you are receiving only because of your age. So I hope you are understanding the difference between factor income and transfer income. So now this concept should be clear, and ask away if you have any doubts. You can put in chat box, you can just stop me. You can ask yourself, do I understand the concept? And if yes, we can proceed forward. And I'll also give you a few seconds to note it down if you haven't. Think, is anything missing? Because I'll ask you a few questions and you have to tell me if it's factor or if it is transfer income. And also transfer income is generally for the weaker section of society. Generally for the weaker section of society. And this always has monetary value. I can't come and be like I'm giving you a TV for free like the chief ministers of states. No, that won't come under transfer income exactly. It has to be direct money. So yes, I'm assuming there's no doubt. All of you have copied it. I'll check the chats once. No doubts? Yeah. It comes under transfer income. Yes. So if I wanted to apply for scholarship, I'll go write one exam. And if I get good marks, I'm getting that. But there is no direct transfer of the 4 properties, the 4 factors of production. If these come, only then it will come under factor income. Factors of production, if it's involved or connected with factors of production, you get factor income. Scholarship money is not rent, it is not wages, it is not profit, it is not interest. It is an allowance. Allowance is like pocket money. And yes, I understand that person had to work very hard, but that doesn't come under labor. It was not labor for someone else. He did not take any risk for himself in a business world. He did it for himself in the educational world. If he made an educational company like Byju's and then he got profit, it will be a factor income. But you're getting scholarship for your good marks. That is a transfer income. Next. So a simple way to understand, if you don't want to think so much, if this has land, labor, capital or entrepreneur, close your eyes, put it under factor income. Got it? So now let's go to the next slide. Here, let's see. The difference, what will be asked by them. You have, in exam, when you're writing difference, always have a basis. Then you're putting factor income, then you're putting transfer income. Always, always, always have basis. If you don't, your marks go away. Learned it from a bad experience. So in your books, the difference is already given. I'll write it briefly. This is money received from factors of production. Money received from factors of production. In this, you receive it without any productive service. Without any productive service. Money received without any productive service in return. And this is our meaning. Then you have nature. So we are talking about factor income and transfer income. What is the meaning? Factor income is money received from factors of production, that is land, labor, capital and entrepreneur. What do we get? From land, we get rent. From labor, we get wages. From entrepreneur, you get profit, and from capital, you get interest. Rent, wages, profit, interest. And in this case, without any productive services. And this is also one more example I can delve upon, is when mothers work. They work for the family out of love and affection. They don't work for monetary benefit. So even though work is being put, they're putting their time, they're putting their energy, they're putting their risk somewhat, it is still not considered as a monetary work. In economics, it is not considered to be a productive work. Productive in the sense that we cannot tell how much money it is, because that work is priceless. And I copied the sentence from my teacher. So anyways, nature. What is the nature of factored income? This is calculated. This is calculated in national income, in domestic income. It is calculated, it is taken into consideration. And this thing is just, phew, nope, no one gives a shit about this in your calculation. Nature, this is calculated in NI, DI, national income, domestic income. But transfer income is not at all calculated, because that is not monetary in nature. We cannot tell what productive services was given. Or else Ambani can come and give everyone $1 billion. Then everyone will give Ambani $1 billion. Government will think, okay, $90 billion happen. Again, 90, 180, then what? 270. It just goes again up and up and up and up. Your GDP will become infinite if you keep doing that. That is why we don't consider TI, which is transfer income, to be part of NI or DI. In exam, you can tell this is an earning concept. This is an earning concept. This is a receipt concept. Because here it is bilateral. You give something, you sacrifice something to get it. Here, you don't have to sacrifice much. You don't have to sacrifice at all. So you just get it. When you get, it is called receipt concept. And that is why we call it unilateral. And you already know the example. And also one more difference could be who receives it. Or we call that recipient. Recipient means who the hell receives it. I already told it. Can someone unmute and tell me who receives money from, what is this? Factor income? Who is the recipient of factor income? Who is the recipient of transfer income? Any guesses? By the way, you can't tell a long answer. It's just chill. Whatever answer you have in your mind, just say, take the risk here. If you take the risk here, you'll be confident in your exams. Citizens. In this, citizens is good. The people receive. In what? Transfer or factor? Okay, what kind of citizens? Can you be more specific? Mainly for vehicle section. Generally, right here, generally, vehicle section of the country. Vehicle section. Generally, the vehicle section receive transfer income. And in factor income, you know the factors of production: land, labor, capital, entrepreneur. Land, labor, capital, and entrepreneur. It is received by factors of production. And in this case, it is received by generally the vehicle section. We can call them as households if you want to be more specific in economics. Households. And sometimes even the government receives transfer income by the World Bank. But in economics, if you go start thinking every single case, it will go on forever and ever. So just for exam perspective, this won't come for more than 2-3 marks. So just remember, money received from factors of production without any productive services. Included in NIDI, not given a shit in NI and DI. Earning concept, receipt concept, bilateral, unilateral. Once you know the concept, all of these will just come onto your head. And now let me ask you a few questions, and let's see if you can guess if it's factor income or transfer income. Number one. And also I keep a scoreboard here for the boys and the girls. Which team wins? I feel like I'm in first standard teacher, but still, boys, girls, whoever gets the most answer correct. First one, unemployment. Represent yourself. Unemployment allowances. What is it? Transfer income. That is correct. I heard Aryan say the answer first. Second one. Okay, compensation received from employer. That is factor income, correct, because compensation is basically wages and salary. Next. Okay. Puducherry cyclone. What do you think? Will this be factor or transfer? If I simply write this much, if you read only this much. Yes. Does anyone want to disagree? क्या? The victim, the Pondicherry cyclone victim, the government is saying, okay, take 2,000 rupees per person. Will it be factor or will it be transfer? What kind of payment is this? Puducherry cyclone victims get monetary benefit. Yeah, it is transfer because there's no factors of production. Land, labor, capital is not being used. Here, factors of production is being used. Can it name what factor is being used in case number 2? Exactly, labor is being used here. So let me ask one more. All these questions were asked in board exam. I'm just asking the same questions. I'm not pulling these questions from my ass. Okay? Very easy. Salary. Salary is the factor income. What is this, Aryan? Disappointed blue. Dude, it's for your own benefit. Shall I even say bonus received? If I simply tell me the reason why. Bonus received on Diwali is labor. Good. If I simply say bonus given for no reason to somebody, why? For no reason. Good job. Yes, good, smart. I did not tell him this before. So this is his own intelligence which is shining out and coming. Okay, enough examples. I think you got it just. So one topic is over and you have now secured 1 mark in exam in case it comes. Nice. For the next 1 mark, how do we study? We are going to see, let's see, final goods and intermediate goods. Very simple. Yesterday I had given a brief idea of this, final goods and intermediate goods. I hope my spelling is correct. Intermediate goods. Great. So there's one sentence which nicely describes this. What is the difference between two? It depends. And it depends on what? It depends on the nature of the use. On the nature of its use. How do we use the good? Only then we'll identify if it's final or if it's intermediate. Now, if I want to use the good for resale purposes, you all know what is resale? I buy something, I am selling that because I'm a shopkeeper. Remember, second hand is not included. Second hand shit is not included here. Only as a shopkeeper, I'm buying a product and I'm reselling the product. Tell me, where will it go? Is it a final good or is it an intermediate good? Exactly, this goes under intermediate. Next, Let's see. I am buying milk and I am a bakery owner. I'm going to make cake out of it. Final or intermediate? Yes, this will also be intermediate good. Okay, now this will be a fun question. Let's see. Let me see, what can I ask? Okay, if I purchase a car, okay, and I use it for my own private use, intermediate or final? Okay, it is final because I'm using it for my own private use. Now, if I purchase a car, now private means it will be private. Now, if I use it for Ola driving, then what will it be? If someone studied in advance here, this is cheating. Yeah, this is final capital goods. Even though it is a final good, you must notice this. You must note this down as capital good, because in accountancy, for accountancy students, very simple way I can say, whatever comes in your balance sheet, it will always be a final good most of the times, because it is except stock, everything else will be a final good. Land, plant and machinery, equipment, cars, vehicles, trucks, all of that will be your final good, but final capital good. Got it? And raw materials and whatever comes in profit and loss account, that will be in intermediate. Profit and loss, bad. Anyways, how can we identify more of these? Let's see. What can I ask? Sometimes stock is there, right? In the book, it was mentioned this. If cloth line unsold with trader at the end of accounting year, it comes in balance sheet and the ending stock. The closing stock will also come in final capital good. This is one of the exceptions, you can say. Closing stock will come under final goods, because this is not raw material per se. This is stock of final produced goods. I purchased raw material, I made it, I kept it. This will come under final goods. However, it is that's it. There's no more however here. So let me try asking a few questions, because I'm 100% sure some questions would be there. You would be confused a bit. Let me try to make a table also. Now, if I use car, in car, if households are using, okay, this is private shed. Or if I'm becoming a taxi driver, this is final good. This is my final goods. Where one is consumption goods, and the other is capital good. And in your intermediate, what will be the example? Fill it up. How can car be an intermediate good? What will be the scenario? Yes, if you are a car dealer and you are using this for resale purposes. I'll give one more example, then we can skip to the next topic. Let's see. In the book, if I remember correctly, sugar was given. Sugar. How can it be a consumption goods? If we use it, that what are we? In this case, we are households. If households use it, for what? Private consumption. How can it become a capital good? If line unsold. If this is the final thing, sugar is the final good which is with me, line unsold, that is line unsold, and here we refer to the shopkeeper. this should be seen in the perspective of shopkeeper. Many people find economics difficult because they do not understand in what perspective we are supposed to see. In this case, we have to see as a household. In this case, we have to see as a shopkeeper, because shopkeepers will have this line unsold. It is yet to be sold. Line unsold. Stock not sold. And this will be calculated at the end of the year. At the end of the year. Now, how will it be an intermediate good? Exactly the same thing. And there are two ways here. One is resell. Can someone tell me the other way? Exactly. If it is used for, we call this, the correct word is to generate. To generate goods or services. In this case, we are generating a good. With sugar, I can make a cake, I can make a chocolate, and I can sell that. And that becomes my intermediate good. So quick recap. If you have noted it down, take a second. Till then, I'll search for the questions which I can use. And then we are going to jump into this. Great. Quick differences, what we need to write in our exam. Final, intermediate. What is the first basis? We have meaning. In final goods, used for two things. One is consumption, and the other one is investment. Because if I purchase a car and I become a taxi driver, my car becomes an investment. And here we do resell, or we use it for further production. Consumption, investment, resell, further production. And like we had transfer income and that factor income, this is used in NI. This is used in DI, national income and domestic income. It's included. However, this is not included. We subtract it. And we'll understand this in the next concept, more about it. We subtract intermediate goods. And I'll explain to you why later on. And this will be within production. This will be, this will not be within. This will be intermediate good within production value. Explain this in a minute. Just note it down for now. Within production value or boundary. And this will be crossed production boundary. This will cross production boundary. This will be within production boundary. And this is how it happens. For example, there is a farmer. Farmer produces, what do we call that? Okay, he produces tomato for ₹10. He sells that to one processing mill and they make, okay, we'll keep it mill, and they make tomato ketchup. And they sell it for ₹15. And after mill, we have a wholesaler. Okay? Or not wholesale, let's have a restaurant owner. That will be better. We have a restaurant owner who purchases the tomato ketchup and he sells, what food item do we use tomato ketchup? I'm a Jain, so I have literally no idea. For what do we use tomato ketchup? Give some food item. Sandwich, great. This restaurant is selling sandwich at ₹30. Okay? So now here the production barrier is what? The production barrier here is up to what? Let me just check if I'm correct. And now we have Aryan who comes and eats it. But he does, anyways, I won't make any jokes. Aryan comes and eats it and he pays ₹30 for the same. So this much part, it was an intermediate good All of this was intermediate good. And this was within production boundary. This is the boundary of production. And it was an intermediate good. However, when the consumer came and purchased it, it became a final good because it was for his own private selfish enjoyment. And that is it. Final good, intermediate good. Got it? And we can use this very same example to identify a little more. Here, wait, you guys have understood this slide? I can erase the differences. Wait, or let me see if I can just bring this down. Bring it down. Nice. Okay. You understood what is intermediate good, what is final good. Now here we are going to understand double counting. With the very same example, we'll understand double counting. And this was a 4-mark question, no, 3-mark question earlier. Double counting. Now, in double counting, in this case, stay with me here. Now, production boundary, you know. Here let me add the consumer. Okay. And say he's selling at a profit and consumer is receiving for rupees 50. Let's assume they paid 50. Leslin did all of this, but now he's selling at rupees 50. Now here, farmer, this was happening. Input and output, let's put here. Input and output. Currently, let's ignore the input. Output was tomato. And tomato ka tha 10 rupees. Now here, milk people, they're using input 10. 10 rupees is the input, but they are selling it for 15. Okay? And that is our ketchup. Now this ketchup is being used. Okay? This ketchup is being used. This ketchup is being used for 15 rupees, and after all of the things for bread, sandwich, and to make a sandwich, they are selling it for 50 rupees. Wait, can I use eraser? Eraser. Yep. They are selling it for 50 rupees sandwich, and that goes here. So now if we add all of this, we get 50, 65, 75. We get 75. But the product is worth only 50, right? The final amount should be 50. But it is showing 75 if we add all of it. And that is wrong. And why is it showing 75? Because we are counting these two again and again. This is our value added. In economics, this is the value which is added, 10 and 15. Every single input that we take, we add some value, right? We took this input, we added value to it. We added value to it. And that is why double counting exists. To give a more clear example, 50 and 75 seems like a small amount, so you won't be able to identify the big difference. Let's take a farmer. Let's take a farmer. Input, output. This difference, you write it down. This is a beautiful difference, and this was in the topper's exam paper. Farmer, input, output. Farmer makes wheat, and wheat is 1000 rupees. Next, the flour mill is there. The mill comes, takes the 1000 rupees input and makes flour out of it, and they sell for 1200. And then the baker comes. Baker's like, great, I'll take 1200 and I'll make bread, and the bread will be 1500. Okay? And here, this includes the initial 1000. This includes the initial 1000 here. This includes the initial 1200 here. Okay? Now, if we add all the input, and after this we have the consumer, right? The consumer gets it for 1500. Imagine he makes it 1500, he's selling at 1500. This much is clear, right? Now, if we calculate the input alone, it will be 3700. But was this actually 3700? It wasn't. It was only 1500. 1500 plus 3700 is 3700. 3700 plus 1500 is 1500. 1500 plus 3700 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 is 1500. 15 So 3,700, if we put that in GDP, India will become better than China. And this is wrong, this is incorrect, we must not do that, and that is why double counting exists. This is the problem of double counting. In your exam, you need to draw this example because this is worth 100 words. If you can just draw this neatly, explain to them, they will understand. Great. And here, this is a production boundary. And everything which is in the production boundary, everything inside this is the intermediate goods. Everything outside is the final good. So now all the topics that I showed, it's coming here except the factor income. Now, what is the actual definition? Double counting refers to counting the output more than once while passing through various stages of production. This is the most beautiful definition that I found. Refers to counting output. If we count all the output, we are going to get 3,700, which is double counting. Double counting is not good. Double counting is an issue. And what it is? Counting output more than once while going through various stages of production. This is a production boundary. We are going from 1 to 2 to 3. We are going through these 3 stages of a production boundary. And when we do that, we are counting output more than once. Here the output is 1000. Here the output is 1200. Difference is what? 200. Difference is what? 300. So if I take this 300, if I take this 200, if I take this 1000, what do I have? 1500. So we must see the difference. So I'm telling you how we can fix it. And in the exam, they will ask you how to overcome. How to overcome. And based on yesterday's class, can you tell me what is the method that we use to overcome this? If you can remember. There was one method of calculating national income which talked about this. Exactly, value added. In value added, we know the formula is value of output minus intermediate goods. Value of output minus intermediate good. If you take all the output, it will be what? 3,700. We are calculating all the outputs. We had 1000, we had 1200, we had 1500. We have 3 different outputs. And that is 3,700. Now let us see the intermediate good. What is our intermediate good? 1000. Wait, go up. 1000 and 1200. This one is being sold. Okay, so this won't be directly intermediate. Up to these two. This is our intermediate good, 1000 and 1200. So 2200 and that will be 1500 and that is our final good. This is one way to do it. Value of output. Next, we have one more method and that is called final output method. Close your eyes and say 1500. Consumer paid 1500. It is 1500. However, value added method is preferred more. This people don't give a shit about. Can you tell me why? Think logically, what is the reason of allowing this when it has one extra step? Any guesses? No, we do not have. That's why I'm saying 1500. Why? Like this is general knowledge. It can help you in Viva, I guess. So I'm just telling this. I did not go in depth with this. Final output, 1500. Both of these are giving the same answers. But why do people prefer value added? Think about it. But won't this apply in every case? If I'm a shopkeeper of electronics, this much money. I'm a shopkeeper for clothing and retail and textiles. Final output. What is the use of understanding this? Why should you know what is IC? What benefit do you get from this? Think you are the financial minister. Do you think knowing this data is good or not? Should you know this data? How is it important? Exactly, production value. As a finance minister, you should know. Output came, but what were the inputs? Why was the input so costly? Can we reduce the cost of the input? Can we give the goods and the lesser price? Why are we wasting so much money in subsidy? Right? So those are important things which we need to know. And that is why it gives recognition to individual contribution also. And thus value added method is taken into consideration way more often. Now, we have one last topic for today, and then it should be over. And these things might confuse you initially when you listen to the class. It will confuse you a bit. But if you start reading the book without listening to the class, it will confuse you even more. So now that you have understood the basic fundamentals, take 10 minutes, read through your book, read through your notes if you're brave enough, and you will understand exactly what it is, and it will be in your head. After this, we have one very basic thing, the simplest thing, and I saved it for the last. Accountancy students won't have any doubt with this. We have depreciation. We have depreciation versus capital loss. Chances of coming in 1 mark, very low, but still, no for the sake of it. Depreciation versus capital loss. Now, to give a very nice example, depreciation is when your bike loses value. It is losing value over time. And depreciation has many reasons. It could be wear and tear. If you use the bike more, when you try to sell it again, it won't be of the same value. You purchase it for 1 lakh, in second hand you can sell it for 60,000, 50,000. It won't go more than that because of wear and tear. Then you have passage of time. Even if you buy now, one more person won't give you the same amount because they will be like, you already purchased it, I can go to the showroom and buy. Why should I do? It can be because of obsolete things. If I try to sell a 1 lakh rupees of computer of 2005, people won't buy it now. They'll be like, what is the use of that? I can get it for 10,000, a better one. That is shit. So obsolete. That means it is outdated. Outdated. It is irrelevant. Got it? And capital loss is when someone comes and steals your bike. Or your bike gets into an accident and everything is demolished, everything is broken. Or fire comes and your bike is no more. What more examples can I say? Anyways, so this happens. Here the value is lost, gone. Value is lost. Here value is reduced. Here you will shed more tears. You will shed more tears. Here you won't give an F. This. What was it? Tell again. Yeah, that is a capital loss. But in this case, we're not talking about selling things, because here we don't have second hand at all. In your 12th standard, depreciation is when your value is being reduced. Capital loss is when the value is completely lost because your bike is damaged in an accident or in a fire, or someone comes and steals your bike. Theft. If you sell it, then it becomes a capital loss because value is lost directly. But in this economics, forget about selling. Do not think about second hand. It never comes. Second hand will never come. Now don't try to connect this with accountancy, then you will have more questions and more questions. So this is depreciation, this is capital loss. And we had a production process now. Depreciation doesn't hamper. Wait, where can I write? Depreciation doesn't hamper much. You'll be like, okay, I have a truck. Okay, it has got almost 1 lakh kilometers. No issues. It is still doing the work. Somehow it will go and deliver the goods, not an issue. It doesn't hamper the production process. It doesn't hamper your PP. However, capital loss, it hampers. It hampers your PP. I'm mature enough for saying without laughing. It hampers production process. And that is because the entire truck is gone. Someone just stole it. It got into an accident. This doesn't exist anymore. And that is an issue. But in capital loss, you can take insurance. But for depreciation, you cannot take insurance. You cannot take insurance in depreciation. But in capital loss, you can take insurance. If something happens, fire, accident, insurance is there to protect you. But for capital loss, provision you can't take. But for depreciation, provision you can take. Provision is basically like your savings. You have some savings amount, you're putting 10,000. As a shopkeeper, I'm like, okay, I have a truck. This truck is going to go away in 5 years. So every month, let me save 10,000. So after 5 years, I can buy a new truck. And that is my provision for depreciation. Even though depreciation is losing the value, I'm saving money to overcome that. So, sorry, wait, what is this? Provision, you can take. Depreciation, provision you can take. Insurance you cannot take. In capital loss, insurance you can take, but provision you cannot take. And that is the end of almost 95% of the chapter of what is there. So what are the points that we covered? We covered factored income and transfer income. Transfer income is free shit, and factored income is what comes in factors of production: land, labor, capital, and entrepreneur. After this, what did we cover? Let me check. We covered final goods and intermediate goods. Final goods and intermediate goods. In intermediate goods, it will be either for resale or it will be for further production. Further production. In final good, it will be either capital, or you have one more thing. What is that called? Capital or consumption. Capital or consumption. This is car for private use. This is car for Ola. Got it? Factor good. This. Then we had double counting. Double counting. And in this, make the diagram. And we had two remedies, and that is value added method, and then you had final output method. Final output. And this is value added, and you know the formula. The formula is VOO minus IC. Value of outputs minus IC. IC is intermediate consumption, which is the same as intermediate goods. How much you consume that. In capital goods, you also have unsold stock. Great. You had double counting, and last but not least, we studied depreciation versus capital loss. This is theft. This is wear and tear. This is outdated, obsolete, and in this case, what happens? It gets into an accident. And also these two things, transfer income and intermediate goods, not counted in your national income and domestic income. These two things are not counted. These two counted. So that was the end. This was a summary. I shared the PDF with you. Any questions? Or do you want me to ask you questions? Chat me bolo. What's up? Okay. Okay then. Have fun. Thank you so much. God bless you. And that is the end. Good night, everybody. Any questions? Nigel, Aptianshi, Salakshmi, any questions? Or you can leave. Okay. Have fun. If you have any questions, let me know in WhatsApp later. I'll leave then. Good. Thank you so much for attending. Thaman, any questions? Perfect. Write it down in your notebook. Practice it once. The best way to learn is by teaching someone, and that's what I'm doing. When I'm teaching you all, I recollect all of that. So yeah, thanks for attending. All right then. I'll close the meeting now. Bye-bye. Thank you. Good night.